In the world of conventional loans, if you put 50% down and you had a 660 credit score, let's say, your interest rate's going to be basically the same as somebody with an 800 credit score.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
And let's talk about if there's someone out there listening who's like never been involved in a home purchase or been involved but didn't really get into the whole mortgage part. Let's tell them about that. What are their options?
Maybe nobody explained to them why they got the loan product they got.
Yeah, let's talk about the variety of products, because there's really a handful of different ways to go.
Sure.
Okay.
Yeah, about 95% of the market of mortgages is really three products. It's conventional loans, there's FHA loans, and there's VA loans.
Right. The easiest one to delineate is VA.
Sure.
I mean, how can someone get a VA loan?
Well, you need to be a military service member, either active or former, have done a certain amount of service. There's a minimum service requirement to get it, or the surviving spouse of a veteran can be eligible. Single best product, like in my mind, for a number of reasons. One, VA interest rates tend to be on the lowest end of the range. The fee structure for VA tends to be quite lean. And the biggest sort of impact for a consumer is the VA starts with zero down payment obligation.
Right.
So you can do it with zero. And it's worth highlighting the other side, which is you're certainly allowed to do a down payment. And there is a benefit for a lot of people to doing a down payment, but you're not required to, because there is no monthly mortgage insurance obligation that you're paying as a consumer. So your monthly payment is smaller on that product than basically anything else.
Right. So the next one we want to get to maybe is for those is FHA loans. And a lot of people equate FHA loans mistakenly as first-time home buyers.
Very often that's true.
And that's a mistake. That's not true.
That is a mistake. FHA is not a first-time home buyer program. FHA is for owner-occupied only.
Right.
Right? So you got to be buying the house to live in. FHA uses or has guidelines that are much more built to be one size fits all.
Right.
Which the idea being, if you meet the minimum criteria for the program, you get all of the flexibilities, which is very different than what conventional does. So FHA is much more tolerating of credit blemishes, job changes, high debt ratios, money, like you don't have much money saved, those type of things. FHA is frequently combined with down payment assistance programs because there's allowances for that. You know, it allows for down payment starting at 3.5% and doesn't require you to have any money left over. Well, as human beings, I recommend that. But FHA doesn't have a magic number for how much money you need to have left over. The factors why people try to not take an FHA loan is the way they handle mortgage insurance, which basically says that mortgage insurance will exist as long as you have that mortgage. Whether it's 2 years or 30 years, you're going to pay that mortgage insurance in the modern version.
Why should I go conventional instead of FHA? What's conventional going to offer me?
The most common driver that I run into is credit score related. But conventional loans are designed in a way to be case by case. It's looking at all your individual factors when it's deciding what it's going to say yes to and what it's going to say no to. Unlike FHA, which is you meet that minimum criteria, you're in. In the world of conventional loans, that's where you become able to finance second homes and investment properties, where a person is rewarded for larger down payments versus smaller.
You've been listening to Las Vegas Real Estate Now. If you ever have a question about real estate or any of the other topics we cover, just call me off air or text me at 702-203-1165. You can also check us out on the web at lvrealestateradio.com or on our handle on social media at LV Real Estate Radio.